there, hope you're doing great today. Have you ever wondered if passive investing is truly passive? Well, contrary to what the name suggests, I would argue not, because as a passive investor, there's still some level of work you need to do, even though you're not involved in the daily operations of running the property and executing on the business plan. On the front end, of course, you're engaged when you vet the operator, the market, and the underlying investment opportunities. And after close, there's still some level of work involved, namely monitoring the progress of your investment. Before we begin, this is just a quick reminder that our videos are for educational and entertainment purposes only and do not constitute tax, legal, or investment advice. So let's begin. What are the 4 key actions that you can take to monitor the progress of your investments? Or at least the 4 actions we'll share that we have implemented to monitor our own passive investments. Number 1 is educate yourself. Educate yourself on the market, sub-market, asset class that you invest in. Follow the market, economic, geopolitical events and other news and updates, because all of that raises your general awareness and how some of those exogenous market and macroeconomic trends could impact your particular investments and the underlying sub-markets and make you more better educated and more empowered investor. Number 2 is read the monthly or quarterly updates shared with you by the operator. You review your bank statement and your brokerage statement at least on a monthly basis, so why not follow the same approach with your real estate investment? That is a pretty sizable capital investment. And over time, as you start reviewing those reports, you will form a good sense of what the steady state or stabilized trends are. So if there are any outliers, you can easily spot those and ask questions of the operator versus waiting to be told, or even worse, feeling that you are surprised. Sometimes those reporting packages can be overwhelming, but at least at a minimum focus on the balance sheet, income statement, and statement of cash flow, and start your review there and dig deeper if needed from there. Number 3 is attend the investor calls. Some operators host those on an annual basis, some on a quarterly, some on a semi-annual basis. So it really varies from sponsor to sponsor, but those are opportunities for you to engage live in a group setting with the operator, not only get the updates on how the investment is performing, but their own view on the markets and macroeconomic trends as well. And if you can't attend, at least watch the recording and follow up with the sponsor afterwards. Again, a great opportunity to stay up to date and stay ahead of any major events. And last but not least is monitor your investments. Of course, you will get the monthly updates, P&L, balance sheet, and so forth from the operator, but you also want to monitor how your investment is performing relative to the original return metrics and projections. You can easily do that in Excel. We personally use a simple Excel spreadsheet that we created, but there are a ton of resources and apps and software programs out there that you can use if you wanted a more enhanced experience. It's not only important to monitor so you can track the progress over time, but it's also fun and rewarding, especially as you start stacking up investment opportunities and layering those cash flow income streams. So that's it. We hope you found today's video helpful, and if you did, please like, share, and subscribe, and we'll see you at the next one.